this concept of 800 million new account holders or banking the unbanked in India, I think maybe we need to expand our idea of what accounts are or banking and unbanked are. If you think about in China where 60% of adults have maybe traditional banking accounts and what's happening on the new platforms, if I started by just making some purchases on Alibaba's Taobao and I had some excess cash on that account, and now I've used it to invest into a mutual fund product and then provide credit history that might access a loan on the consumer finance side, that's a really interesting new way to onboard financial services customers.
Yeah, absolutely. That is exactly actually what I wanted to say before. Is the slow will be the financial industry really adopting these new technologies and getting to the end banks and eventually offering them the possibility to eventually using the surplus they have in their accounts, investing them onto other financial services, insurance policies, or whatever the system that you have. The more you're going to have new entrants that like Alipay and others into that space. Though the question also is that, I think you mentioned this, Rebecca, before, is that, or you mentioned this actually, is that, banks have faced over the last 3 or 4 years, a tsunami of regulations, right? And that's reality. The other reality is that all these companies, the Alipays, the Alibabas of all the world, don't yet have to face all this tsunami of regulations. The more they'll get into this, the more, of course, they'll get under the scrutiny of the PBOC in China, the FBI, and I know what it is actually to face FBI regulation in India. Believe me, it's not that easy, right? Because these people are responsible to making sure that the whole financial industry can still work, right? And that is their responsibility. Can you imagine that there would have been some disruptive technology involved into the days after Lehman went burst, right? Hopefully at the time, the central banks had put together systems that have been able to sustain the load. If the day after, none of the system would have been able to work appropriately according to the failure in adoption principle, there would have been actually any blood into the financial veins. That would have been over. It would have been actually the end of the financial systems. Simple, right? So hopefully you still have these regulators that are behind the system to making sure that the whole system still follow a certain number of rules that ultimately will defend the interest of the users, of the citizens. So I'm with you, but at the same time, all these companies sometimes will also start facing the pressure of the regulation. And believe me, one of the key issues that banks are facing today is that, and I'm supporting this regulation in a way because they help making the financial systems much more sustainable in the future. But if the only thing that as they have so much to invest to be compliant to all this regulation, they have actually little to invest on new technologies, new services, and that's the main issue that they have as well.
So is that really an unfair advantage the new entrants have over the incumbents? And actually, there's more broadly, there's a feeling that this disruption is taking hold in the emerging world versus the U.S. and Europe because the banks there are, quite frankly, under a regulatory burden.
Well, I think it's going to happen everywhere. I think we should separate deposit and settlement. And for the government, deposit-taking entity is very important because they have to use taxpayers' money at the end of the day. The settlement is different. So all this, the digital innovation happening is this settlement side. Okay, so in that sense, settlement business can be totally away from banks. Right. And I wonder, I didn't read the article carefully, but the iPhone, a new iPhone, does it have NFC?
Yeah,
it does.
Yes.
Yeah. It had NFC.
Apple will dominate the settlement. It's easy at least for the individual retail people settlement with smartphone with NFC.
Yeah. If you don't look at regulation only from the Western world, and sometimes Reyes did mention that RBI regulations are in a sense very tough, and I believe this toughness comes from wanting to protect, and in a way it has protected when the crisis hit, that it didn't hit as much India, the financial crisis, because of some of these regulations which have been created. So going forward, even as we say, digital world will take by storm the entire industry. The security keeping pace is going to be a key enabler or a detractor. If there are too many frauds which happen before things settle down, everyone may kind of start clamping down on this entire initiative. And it cannot be any more cyber security in a passive way. It has to be very much in the active way as transactions are happening. So clearly that part developing is an important enabler to this digital revolution happening, not just for settlement, like you rightly said, more on the deposit taking side, but also for settlements. In a sense that to enable and
that's actually just really quickly on that. I think we can't emphasize Oki's point enough, because finance is a term that attracts a lot of different ideas, but all of them are viewed very, very differently by regulators, by participants, right? So, I mean, I would use slightly different terminology, but there's a transactional side which naturally or natively lends itself to the way that people behave now, which is mobile, which is connected, which is user friendly. But then there's capital formation, which is going to have all of the same, in my opinion, legacy baggage that it has forever, which is that governments are going to care about what money is coming from where, the sourcing of it, and what it's being used for. Industry is going to worry about the macroprudential factors, and of course governments will too, and the systemic risk. Regulators are going to worry about individuals and whether their fiduciary interests are being protected, whether they're being exposed unnecessarily to, and this isn't new stuff. We've had tulip bulbs, and we've had Florida real estate. We've had a lot of different excess moments in time, and as we get this kind of intuitive native transaction world to evolve, like you said, there'll be residual cash left on the phone, and that'll start to become the beginning of financial or capital formation, which will then start to get you into the order world of finance, which then is, and by the way, the reason, and I think you wouldn't disagree with this, the reason why it feels like U.S. companies or developed market banks are so burdened isn't just because they're being regulated, it's also because they have large incumbencies that have been there. I mean, these banks and these financial institutions and these exchanges and markets are still in motion. So it's the difference between like building a new car and actually trying to change a tire and a moving one.
Right. So you would agree that banks like Goldman and U.S. European banks really face a big disadvantage or some strong headwinds?
I think disadvantage is a strong term, because what the implicit in that is that every one of us is in exactly the same businesses or have exactly the same business model. This is always been a very, very segmented industry, and I think that actually technology as a disruptor will allow more specialization, more different participants to enter into the supply chain at the point where it makes the most sense. I mean, taking it away from even finance, it wasn't that long ago where if I was a Silicon Valley technology innovator, entrepreneur, I would have to think about software development in-house. I would have to think about the technology infrastructure. I would have to think about a lot of things, and it would cost me millions, maybe tens of millions of dollars. Today, I can host it on somebody else's site. I can get somebody else to be the development core for it. There are people who have expertise in the user interface. There are people who have expertise in the quantitative or the data science side. It doesn't make the industry less robust. It makes it more robust, because you have real specialized players in each of those molecular parts of the supply chain. So I'm sanguine about the future. Don't get me wrong, I'm not the Luddite, but I think that we have to conceptualize the future as not being dominated by institutions that largely look the same, but by lots and lots of entities that look different.
You mentioned Africa before, and what's happening in Kenya is quite interesting, because you have a telecom company, M-Pesa, who is the largest banker in the country. I think $18 billion in transactions last year, and the incumbent bank trying to get their way, clawing back into this business. How likely is it, do you think, in India and in China and in Myanmar and other places around the world, that we could see phone companies,
Brazil
internet companies, Brazil,
just
unlikely,
bank accounts.
unlikely entrance to the banking business, really leaving the industry far behind?
Yeah, I mean, if I were to talk about India, I can very clearly see that one thing they have more than anything else is mobiles now. So it's going to be an easy way, not just of communicating, but of doing many things along with the phone. So it's going to become a central figure, and whoever will own, so a telecom company can come.
Right.
But I'm also seeing going forward that is going to be a view of business movements. So whoever is going to conquer that business movement would probably have more of a say, because you're just not talking about banks, then you're talking about insurance companies as well. You're talking about the city regulations in terms of whether it is the traffic regulations or many things like that. Or how does a fire engine or a fire department and a police department work? So, where does it going to kind of have deep impacts is going to be seen. Whether it's telecom company which will have everything, or it will be many other people, including the people, not just the airwaves, but are capturing the business movement. Maybe IT companies have an equal chance as well going forward. So, but telecom certainly has a first mover advantage, as they've seen in Africa.
But one of the biggest pools of capital in the world is the Japanese post office. So, maybe on the transaction side, it seems like the movement is one way, but the reality on the other side of the equation is still steeped in history.
And I do believe that governments will interfere into this situation. Even we separate the deposit and settlement, the government do not want to see those people's money to disappear. And we can't just let telecom companies to take care of everything. So we're going to have to, they will bring in some sort of new regulations, I believe.
I think it's very fair to say that, getting to that space is that market is a very natural addressable market for all the telcos that you have any other place. But the reality also is that they will be only successful if in doing so they'll be capable to start developing in proposing additional services. I think this is one of the success of Alipay with Alibaba, is that it is a combination of a sort of superstore with a payment system as well, and the two together actually are highly successful, because certainly Alibaba, yes indeed, is capable to leverage and to work with all the power of data they are collecting through the payments as well, which is fabulous. Now, if they don't do that, they'll get to failure as well. And we mentioned M-Pesa as an amazing success of having a telco in Kenya getting into the payments business, these sort of virtual wallets and payments systems. In a few years, grasping something like 50% of the market in the country. But then suddenly, as they were not really capable to developing value-added services, they start actually expanding their services or conquering other markets. They try to go to South Africa, major failure. For the simple reason that you mentioned as well, because there they've been confronted with other regulation, other practices and laws in the country that made the model completely not practicable in that country. So I think the way they will be expanding, the way they will be actually proposing value-added services will define their success or no.
But to jump off that a little bit, I think the interesting thing in the China market is that the disruptors have their own advantages as well. So you mentioned Alibaba with a kind of integrated solution for the consumer. WeChat, when they really emerged into holding deposits and distribution of digital wallets, had already grown to 300 or 400 million accounts. And so I would say if you think about a disruptor having to over time migrate into a more regulated playing field, somebody who has that depth of customer relationship and profitability, frankly, is well positioned to work with the government. And as long as they're creating incremental value for those consumers from a perspective of, this is a business that 300 or 400 million people want to still see exist, then I think there's a conversation with regulators that can be actually, win-win.